Hello. This is Martin, TDFA, Teach the Teacher assignment, week 5. Today we're going to talk about risk profiles. So there are three main risk profiles. It's conservative, aggressive, and moderate. But first, I'll explain what actually determines your risk profile. So most all most of the time it's income stability. If you have a stable, regular income, you'll more likely be more aggressive with it, more comfortable to put money into growth stocks, into something more aggressive. Also, time horizon. Time horizon refers to when will you need your capital back. So if you can invest in 10 years, then it can be something more aggressive that can lead to more growth. Financial cushion, if you have uh, some money in savings, you can also be more aggressive. If you don't have anything in savings, then you'll lead more towards steady uh, investment that can bring dividends probably. And your emotional tolerance. Emotional tolerance refers to how likely are you to sell everything as the time it hits minus on your balance. Uh, if you don't have any emotional tolerance, you will not go aggressive. Let's start with aggressive. So, what aggressive strategy players buy, it's usually growth stocks that refer to tech or startups. It can also be cryptocurrencies, Bitcoin, XRP, ton, anything, and it's emerging markets in Asia, in Europe, it's Poland, something else, and they can also use leverage. Uh, These aggressive players are comfortable with big swings that can bring 50% of profit in one day, and it can also lead to 50% loss in one day. But the main point is they can handle losing 30 or 50% temporarily, and they're more oriented on long time horizon, so uh, it's usually around 10 years. More moderate traders, investors, they tend to buy something with a mix of stocks and bonds, uh, ETFs, or some exposure to growth sectors, companies. Their portfolio is more diversified and they can handle 10 or 25% of loss temporarily, but they also want more growth and stability. Medium to long-term horizon, so from I would say 3 to 10 years. And then conservative players, they tend to buy more bonds, savings, deposits, and dividend stocks. Uh, they don't like volatility, they prioritize capital preservation. What they usually do is around 40% in bonds, 20% in cash, and 40% in safe stocks. Shorter horizon, or maybe they have specific goals, say for pension, for example, for retirement. How it influences your decisions. Aggressive players buy high growth assets. It can be startups. Uh, they are okay with sitting in losses for a couple of years, let the startup grow, and maybe it will bring 100% in the future. So they hold their stock through volatility and they accept drawdowns. Moderate portfolio is more diversified. They rebalance. It's mix of safety and growth at the same time. And conservative, it's focused more on capital protection, capital preservation. They avoid any risk markets, so definitely no cryptocurrencies, and they accept lower returns for protection. That's it. Thank you very much. Have a good day.